Let me tell you why this one candle Fibonacci model works like absolute magic. It completely strips emotion out of the equation. It is a purely mechanical system, giving me a remarkably simple set of rules that I can plug directly into my trading routine. All I do is mark a single candle, set my pending orders, and simply walk away. To be completely honest with you, if someone looks at this framework and still finds themselves unable to trade this setup, it might genuinely be time to consider deleting their TradingView account. With the gold chart pulled up in front of me, the very first thing I do is scale up to the daily time frame. Once I am looking at the daily view, my initial step is to measure the high and the low of the previous daily candle using the Fibonacci tool. Doing this is incredibly straightforward. I just click and drag the tool directly from the top of the upper wick down to the very bottom of the lower wick. To make this work, I configure specific key levels on my chart. For a buy setup, the 1.0 level marks the daily high and serves as my entry trigger. The 0.9 level acts as my tight stop loss, and the 1.25 level is where I place my take profit target. On the flip side, when I am looking for sell setups, the configuration is the exact inverse. The 0 level represents the daily low for my entry. The 0.1 level is where my stop loss sits, and the negative 0.25 level becomes my take profit target. The exact same logic applies when the market moves downward. For my sell orders, I place a short position right at the low of the daily range, anchoring my stop loss at the 0.1 mark and projecting my take profit target down to the negative 0.25 level to capture another clean 2.5 R profit. In practice, my trading day boils down to one simple routine. I wait patiently for the daily candle to close, and then I simultaneously queue up both a buy limit and a sell limit order, Eastern Standard Time. Now that the operational engine is clear, I want to look at the cold, hard data I have meticulously compiled for this strategy. Looking closely at a massive sample size of 482 total trades using this exact 2.5 risk to reward model, the numbers speak for themselves. 204 out of those 482 trades smashed directly through the 2.5 R take profit target. That translates to a very stable win rate of roughly 42%. When you crunch the math, it means I walk away with a little less than half an R in net profit for every single trade I put on, win or lose. The proof is right there on paper. This system undeniably works, provided you possess the discipline to follow the rules blindly. I should point out that my stop losses are incredibly tight with this method. However, because I am aggressively targeting such high risk to reward payouts, minor issues like market spread and slippage have virtually zero impact on how the overall profit factor plays out over time. With the rules and the mathematical foundation firmly established, I can step onto the historical chart to review the setups. To get the highest definition view of price action possible, I drop down from the daily frame to the 15-minute time frame. Let me adjust the view here and clean up the chart by removing old position drawings so we can focus clearly on the data. Now that the daily ranges are clearly projected onto the lower time frames, the candlesticks start printing. To make things visually foolproof during my review, I highlight the forbidden trading hours using a bright red box on the chart. If price happens to breach either the daily high or the daily low during these red shaded hours, it counts as an automatic scratch. I do not take a trade under any circumstances. That is the exact moment my execution platform wipes my pending orders clean before that 12 p.m. Eastern Standard Time cutoff. Let's look at how the price plays out. All right, look right here. The very first entry trigger occurred at the daily low. Because I set my trap ahead of time, a short position would have already been live in the market. I anchor my stop loss directly at the 0.1 line and project my take profit target straight down to the negative 0.25 level, perfectly aligning everything with my predefined rules. As seen unfolding on the screen, price drives lower and locks in a beautiful 2.5 R gain. Once again, notice that red box looming ahead that is the strict no trade zone, where I refuse to touch the markets. As I noted, my resting orders are pulled before 12 p.m. while I wait for the next daily reset. Throughout my tracking, I have documented every single entry time, and the data repeatedly screams that I must stay flat during these afternoon hours because market liquidity completely dries up. Let's keep the candles moving. There we go, a flawless fill right into my short level. I instantly position my stop loss at 0.1 and anchor my take profit at negative 0.25. Just like before, I inspect the micro timeframes to guarantee there was no hidden stop out before the profit was realized. Toggling down to the low frames, the data confirms a flawless run. Price hit my entry line and melted straight down with zero hesitation. This step is vital because on a higher time frame, a single candle can look like a simple tap and drop, but it might have secretly wicked up to a stop loss first. Checking the micro charts ensures my data remains completely accurate. Jumping back to the 15-minute chart, this trade smashed straight into take profit in under 30 minutes, which is absolutely wild. This rapid, explosive movement is precisely why I am obsessed with trading gold. I am exploiting its massive inherent liquidity to ride intense, impulsive breakouts the moment a key level cracks. With that second trade safely booked, I clear the screen and record another positive 2.5 RR in my journal, bringing my session total up to a solid 5R. Now, let's let this current daily range finish printing out. Beautiful, the session has wrapped up. I readjust my Fibonacci tool to match the new high and low points. Remember, when looking at a daily chart, this entire block of price action is compressed into just one single candle. Everything between these vertical boundaries represents yesterday's daily candle, and this new space is where today's price action is fighting for territory. While the daily frame shows bare candles, analyzing it on the 15-minute chart gives me the cleanest, most transparent view of how price is actually moving. To be completely transparent, this specific gold model is one of my absolute personal favorites. It consistently nets me around $5,000 to $10,000 every single month, easily scaling past the $10,000 mark during high-performing months. On the rare days when gold doesn't give me a valid setup, I simply pivot to other single candle setups in my routine. I wipe the lost position from the screen, log a good old-fashioned -1 RR into my journal, and keep moving forward. Since my single trade for the day is done, there is absolutely nothing left for me to do except show up at the next daily close to rinse and repeat. That is the sheer power of these single candle systems. You show up, place your orders, and walk away. Let's let this range close out and look at my next set of levels. Drawing the Fibonacci tool from the daily high down to the daily low. Price approaches the low and gives me a perfectly clean short entry. I draw the short tool, place my stop loss at the red line, set the take profit at negative 0.25, and prepare to capture another 2.5 R. Just like always, dropping down to the 1-minute chart verifies that the entry candle didn't trigger any funny business by taking me out early. The micro view shows a flawless execution with no signs of an immediate reversal. Back on the 15-minute chart, I let the trade play out until it hits a boundary. Boom, there it is. Another beautiful plus 2.5 R trade in the books. I erase the drawings and record another positive 2.5 RR in my log. At this exact point in my session, my gross winnings sit at 7.5 R, and after subtracting my single 1 R loss, I am holding a net profit of positive 6.5 R. Naturally, when you trade an asset as volatile as gold, with an incredibly tight stop loss, you are going to encounter some market spread and minor slippage from time to time. However, because my strategy targets a substantial 2.5 R payout, the relative impact of those spreads and slippage becomes incredibly minuscule. This is exactly why I am actively testing these higher risk to reward metrics over the older 1R target models I used to trade. Back on the charts, I let the day wrap up and identify my next daily high and low. I slide my Fibonacci tool into place and let price reveal its hand. There is my trigger, another short entry. I line up my stop loss at 0.1, set my take profit at negative 0.25, and quickly double-check the lower timeframes for safety. The data shows a perfectly clean fill, so I jump back to the 15-minute view and let it run. Incredible. Another flawless plus 2.5 R win captured. I erase the position and add a fresh positive 2.5 RR to my journal while waiting for the next daily open. The next day's levels are printed. I anchor my Fibonacci tool at the low and stretch the 1.0 level up to the previous day's high. Price begins to push toward the upper boundary and triggers a clean, long entry. I map out my long position tool, starting at the 1.0 mark. Place my stop loss at the 0.9 line, and target this blue line up at the 1.25 level. The 15-minute candle shows a clean fill with no immediate predatory wicks, so I can monitor the trade right here on this time frame. Trading is entirely a game of probabilities. You will inevitably take losses, which is why I constantly emphasize choosing math over human emotion. I look at the data, I find a system that works, and I trade it mechanically without using personal discretion. My account equity experienced its most explosive growth the exact moment I stripped away discretionary decision-making and started trading strictly by the numbers. This is the exact shift that is so vital to make. I always aim to backtest systems thoroughly and build concrete, rigid rules based entirely on what the historical chart data is telling me. I am incredibly meticulous when it comes to data collection, tracking everything from the total risk to reward captured down to the exact minute of entry. Mastering this simple skill of rigorous data collection is what allowed me to develop these hands-off, single candle systems that only require a few minutes of my day. Once you master backtesting, you unlock the ultimate power to build your own profitable trading systems. Let's look at a few final examples together. I let the current range finish closing out and my new daily boundaries appear. I outline the range from high to low. Keep in mind, the moment that daily candle wraps up at 6 p.m., my buy and sell limit orders are already sitting live in the market. Looking at the chart, price breaks lower and gives me a sharp entry into my short position. Before letting it play out, I verify the entry on the micro charts. The 1-minute candle shows I was filled perfectly with no adverse reversal taking us out, so I return to the 15-minute frame to see how the story ends. Price struggles, reverses, and hits my stop loss, giving me another -1 R trade. I wipe the position and log the -1 RR in my journal. Standing aside, I wait for the next daily open. I slide my Fibonacci levels into place for the final day. In real-time trading, my buy limit sits at the high and my sell limit sits at the low, completely finishing my work for the day. Price begins moving and approaches the daily low. No entry just yet. And there it is, a clean short entry at the bottom of the range. I place the short tool for visual clarity and toggle down to the lower time frames to verify the fill. Looking at the 1-minute chart, everything looks immaculate. This specific 1-minute candle activated my position and showed zero signs of looking back, meaning I am completely in the clear. Returning to the 15-minute chart shows the exact type of behavior that makes gold so incredible to trade when a key boundary breaks. The moment we cracked the daily low, an intense, impulsive wave of volume swept into the market, driving price straight down into my take-profit target in a mere 30 minutes. In a real trading scenario, I simply place my pending orders, and the market handles all the heavy lifting, putting a massive profit directly into my account while I am away. That single win locks in another beautiful positive 2.5 R, and I will bring this data tracking session to a close. Looking back across this specific testing sequence, I took a total of 10 trades, resulting in exactly 5 winning trades and 5 losing trades. That gives me a clean 50% win rate for this particular session, which actually overperforms the system's long-term baseline metrics. When testing a small sample size of 10 trades, seeing a 50% or 60% win rate in one session, or seeing it drop down to 30% in another is common, but over hundreds of trades, the numbers always iron out to show the true statistical edge of the system. In this sample session, the 50% win rate at a 2.5 R payout generated a massive net total of positive 7.5 R, which averages out to a phenomenal 0.75 R per trade. While this specific session overperformed my long-term average, it perfectly illustrates what happens when you let the math work in your favor over time.